So here's the situation. So when we started this training stuff for like branch managers and different peeps in the company, everybody has their little, I guess, response to that and little ideas. Me, I want to just focus again, like my first training of what I would do going into a real estate office. You know, I'm not Brett Shapiro and know every guideline and read guidelines all day long and just, you know, an encyclopedia. But I like to try to find things that I can share with this team here, because sometimes you forget about the little minor stuff that might make a massive difference in winning a loan, especially with where rates are right now. And then also little BS that you can get into a realtor's office. Like I would take this and go to a realtor's office, do a 10-15 minute presentation on it, and then they just ask questions. And then you have their attention and they love that shit. Pardon my French. So today, I'm going to follow up. Nick Principe, who used to be here, did a training like this about 4 or 5 months ago. I'm going to do my version of it. There's really not much more, but just maybe a refresher. And then the goddess Natalia on our team is going to be like throw everybody a curveball with something that is, I think it's even more exciting that most loan officers don't know. And I know 90% of realtors don't know about. I'll let her explain that. So with all due, I'm going to start my training here. I hope this works. Presenting teams. Does this work? Yes. All right, here we are. Today, my friends, I'm just going to review HomeReady and HomePossible. All right. And it's presented by me, Freddie Finance, of course. All right, so here we go. Who is it for? Lower income borrowers. Both programs have income limits determined by the area median income. In this situation, AMI, you know, I would explain to realtors, if you're talking to them, what AMI is, and it depends on the county and the zip code, and maybe share a screen with the situation, show them how easy it is to go with the address. Depending on time, you know, this is all great fluff to add into these realtor presentations. So, you know, you can flip over, put the address in, show the realtors how that works, and wow, they love that stuff. But for you guys, I'm pretty sure that we know how to do this. If you don't have, I had the link on here. If you don't know the link, it's easy. You Google HomePossible, HomeReady, income limits. It's right there. Pop in the address that shows you what it is. All right. So it's for lower income borrowers, lower credit score borrowers, adjustments to rate LLPA, adjustments to rate caps that can make conventional mortgage more affordable for buyers with a lower score by limiting the max points and fees that can be charged. So again, at this point, I've explained to them, and hopefully everybody in this call know what LLPAs are, is that with these two programs, what happens is where they are backed by Fannie Mae and Freddie Mac, your typical hits for FICO score, for loan to value may not exist or dissipate depending on the scenario. So that way your first time home buyer or anybody that does qualify for this can have a better situation. So when people ask, like, what's your first time home buyer program that you offer? They don't always mean grants. So when a realtor asks me this, you know, they're not always asking for grants. So when I go into detail with this and actually explain HomeReady, HomePossible to them, they're realtors. Most of them don't know anything. Okay, so remember, just pretend that they don't know anything. So as you explain loan level pricing adjustments, they don't have any idea, and explaining how this program is really directed to first-time home buyers, and this can really help them. All right, which will separate you from other loan officers who just put it out there like, oh yeah, we have a grant program. Well, that's not really giving somebody your full attention and really value. This is how you give value. Borrowers with limited savings for down payment. For single-family homes, both of these programs allow for 3% down payment, but there's some advantages using one program versus the other when it comes to multi-family properties. Not limited to first-time home buyers, HomeReady. All right, so as you'll see next, that the HomeReady program and the HomePossible, there's differences there, whereas a HomeReady, you don't have to be a first-time home buyer, which is pretty cool. HomeReady Mortgage. I hope you guys like my graphics. This is great. I'm really excited when this popped up. Fannie Mae program, which is conventional. Again, remember, you're talking to realtors here, at least for me. You have to explain things. Something that we know what Fannie Mae is, most realtors might not understand what Fannie Mae is, all right? AUS is run through DU, and this, I put this on here just for them. This is how the computer approves the loan through the credit scores and all the data that we put in. AUS will notify the borrower is eligible for HomeReady in case you miss it. So as you loan officers know, when you run this thing through, you're going to see whether or not that you have that HomeReady thumbs up or thumbs down. All right. And then you can obviously work backwards if you think you're getting it, and we can figure out why you're not getting it. All right. But DU should show you right on there. There is a 620 minimum score. Now, this is big because although you can go down to 620 minimum score, that's there because conventional financing, your minimum credit score is 620. A lot of the benefits of this are going to end at what, 680. All right. So be careful with that. And that might be part of the reason why you might not be getting certain benefits of this, because your FICO score. You don't have to be a first-time home buyer. You can own up to one other finance property separate from the subject property. So biggie here. You don't have to be a first-time home buyer. And even if you own another property right now, you're going to purchase a second property, you could still take advantage of HomeReady. Massive. Most people don't know that. Single family, obviously 97 LTV, which is 3% down. Again, another feature you need to talk to realtors about and have them talking. Most of them don't know what LTV is. 2 family, you can go 15% down. 3 to 4 family, go 75% LTV. For 2 to 4 unit properties, if the LTV is greater than 80%, then there is a 3% minimum borrower contribution requirement. That means that they have to show at least 3% of their own funds for this scenario. If LTV is 80% or less, then there is no minimum contribution. Any questions so far, young puppies? Yes, Cam.
If you said it and I missed it, the 97 LTV, you do have to be a first-time home buyer to get the 97. So if you're not a first-time home buyer, limited to 95, is that correct?
This is correct. Sorry, I missed that.
No, all good. Just want to make sure I know it.
But this is good because I can add this. So thank you, sir, for that. I'm surprised Brett didn't jump on me there. Next page, HomeReady. Continue.
Hey, Brett?
Yes, sir.
This is like a Will Smith, Chris Rock situation. Take my name out your mouth.
I love it. All right. So you must be under the 80% of the county AMI. All right. So here's the link, and I would explain to them. Obviously, whatever that area median income is, you have to be 80% to go HomeReady. Okay. So at this point, I would show them the link, show how easy it is. Go in there, type the address in, and we can figure out if they're eligible for this ASAP. All right. Lower mortgage insurance requirements. This is also a massive thing. So not only from pricing, but for the borrower now who's like really extending themselves to go above like their price range, you could save them a massive percentage here, at least 10% in some situations with the MI on HomeReady and HomePossible because of the MI requirements. And that's huge with the monthly payment. On 1 unit properties, rental income from accessory dwelling units and or border income is allowed. Accessory unit does not have to meet local zoning requirements. I've never really used this, but in reading more of it, has anybody used this situation for the 1 unit before on this call? No? So when I was reading about it, it's pretty interesting. If you can prove that a non-spouse has been living with you for the last 12 months and they're moving in with you to a 1 unit property, you can utilize, I think it's up to 30% of their donation to you per month to go towards your DTI. All right, so let's get creative here. Sometimes we need to think outside the box, ask these questions for people that maybe don't qualify for certain things. If they do have a friend that's living with them, but this is allowed in this situation.
Even if they're not in the mortgage?
Correct.
I've used that in the past. And if you go, you're going to take whatever the rent is. So I think they have to be living them for at least 6 months.
I thought I read 12 months, but I could be wrong, but sorry.
But whatever, the rule could have changed because I am a dinosaur. And whatever you use, you have to take 12 months. If they've only been living with them for 6 months, you still have to use 12 months as the computing average, I believe. Spreading
it out. I'll do more research on that. My apologies, but again,
it's got to be documented. It can't cash transactions. Don't worry, there needs to be a paper trail.
Cancel checks, Venmo, anything like that. So first time
That's super cool.
home buyers are required to take an education course through this program. And then obviously no LLPAs, adjustments to pricing. I would explain this again to what realtors are going in, 10% down, 5% down. There's different hits on the rate and explain to like how that works, how rates are given. This is one of the largest advantages of using HomeReady versus the normal Fannie Mae loan, even before the recent LLPA announcement. Standard risk pricing is waived with LTV, loan to value, less than 80% and credit above 680. So this is massive because in those situations in which you get these hits of 1.5 and 1.75, those are all eliminated. So sometimes your rate, you could be at, I hate to say this, but you could be at 7.25 right now, paying 1.5 points for a borrower. All right. Because you didn't click that affordable button in the pricer, that's what you're seeing. You go back, you click affordable button, boom, you come, all of a sudden you're at 7.25 par. In some cases, this is massive. So my recommendation for this is HomeReady and HomePossible would always be, hitting that affordable thing to see if it works, because it could save deals, and then you won't have to ask Mark or Dave for a concession. All right.
Hey, Fred, I have a question.
Yep.
When you do click the affordable tab, does it do the income calculation for the county you're in?
It does. In red.
Got it. And one other question. I saw something floating around. There is still an income cap, even if everyone is a first-time home buyer. Is that right? Or has that been
Correct.
waived?
Correct.
All right.
But I'm going to go into my spoiler at the end. You're spoiling me a little bit. You're spoiling me a little bit. There's a secondary HomePossible program that came out that you're not limited to the 80. I think we went over that a couple months ago, but I'll get to that in a second, where you can go 100% of the AMI. So, all right, HomePossible mortgage. All right, same thing, basically, with a couple minor differences. All right, so this is Freddie Mac's version of their first-time quote unquote. I'll just talk it quote unquote buyer program. Again, it's conventional product. AUS is run through LP. I'll explain this to realtors. It's not a DU product, it's an LP. And again, this underwriting system will let you know whether it's eligible for the HomePossible or not. Your minimum FICO score, though, on this puppy is 660, a little different than the HomeReady. You do not have to be a first-time home buyer. You can own up to one other finance property, separate subject property, no more than 2 homes. You good? No? Yes? Single family, 97 LTV. 2 to 4 family, 95 LTV. 3 to 4 family with ARM, 75 LTV. For 2 to 4 unit property.
The HomePossible is a 620, not a 660.
Why do I have 620 in there? Maybe my research is bad. Well, thank you.
660 is for a manual underwrite, but it's 620 for a regular HomePossible.
All right, I'll update that.
Other than that, you're doing really good.
Thank you, sir. If LTV, it's basically the same situation here with the rental properties or multifamily unit properties. But I would always explain to realtors on this call, whenever you have a situation like this with any kind of scenario, make sure they're calling us and you're reviewing certain things with them before making offers, because some of this stuff can get tricky. You might have properties that, they think it's a 2-unit property, but it's really not. You might think it's a 3-unit property. It's not zoned. Okay, I've run into that a bunch of times where people are utilizing different incomes for 2 or 3 units. But, in fact, they're not zoned like that. So it might ruin some deals. All right. Next, HomePossible. You still might have to be under the 80% of the county AMI. Again, go into this real quick. Always check the website to make sure, because if you don't check it, I've been burned before on this, where you assume, quote unquote, that you're good to go with the income, and then you get burned when you find out that your income is too much. All right. Lower mortgage insurance requirements, same thing. This is huge. 25% is actually massive at 3% down, because that could save some people a ton of money. All right, so it's good for your DTI as well. On 1-unit properties, rental income from accessory dwelling units or border income is allowed. First-time home buyers are required to take an education course. Typically, the framework will work here. So the same first-time home buyer class that you have to take with HomeReady framework will be acceptable through HomePossible as well. All right. Does anybody know? Because I actually had something a couple months ago that at one point it was $75, and then it was free for a while. Does anybody know if it's still free?
It is now free.
It's now
Yes.
free, right?
Yeah.
All right, because I couldn't find it, and we had a borrower argue with us that it's still trying to charge them $75, but I was pretty sure it was still free. So that class is now free. Very easy. It does take anywhere from 3 to 4 hours for them, but listen, it is what it is. All right, Mr. Guggenheim's favorite quote: "It is what it is." So just suck it up, is what I would tell them. Some minor differences here. See, I don't understand, Brett. I found this in my research last night, so this might screw this up, and I might have to alter this. But I saw 660, man. But I'm not going to argue with the great Brett.
Well, we'll use your word research very loosely. Thank you.
Thank you. John, you have a question?
Yeah, no, I just wanted to, I got a different angle on that home buyer course actually from a guy who just closed. And of course, you know, the way it normally works is you go through the whole process, and then towards the end, you tell them they've got to take the test or the course. And I was talking to him, and he goes, "Hey, I wish you would have told me to take that course right off the bat, because it would have answered a lot of questions that I've gone through with you." So I just put it in my head, the next time I'm going to tell my customer on a HomeReady or HomePossible to take the course right up front. And I thought that was a lot better way to handle it instead of noodling around at the end. And that's all.
Yeah, I mean, some borrowers, it's a great point, but you know, our borrowers, most of them don't like to do much up front, and they like to get into the house. So if you have a borrower that you can recommend that to, that's also a way to secure them into your little cradle and your nests. This way, the little birdies aren't going after the nest and looking for different rates and different loan officers. The more you can review with them and more you can teach them up front, it's probably the better. Always, but especially now. You know, you don't want them coming out of the nest, especially these days. All right, so that's a great point, man. John, thank you, John. All right, so let's see. How does this impact your buyer? Hopefully you refer them to me. Thanks. This is something that the realtors will laugh at, blah, 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 blah. So this impacts them because of the potential to have lower rates, which could lead to more buying power, especially in today's market. Rates are moving. People are upset. But again, for our mindset and for your client, you come back and your chest is pounding because now you're under contract and you're like, oh man, rates moved. But maybe you forgot to look at the HomePossible HomeReady, and then you just saved them 0.25% in interest, or 1.5% in points, or 1% in points. It's a big difference right now. Lower LLPAs, price adjustments, better rate. Lower down payment options on both single family and multi-unit properties. Use of other forms of income, but not normally allowed with the Fannie and Freddie products. No self-sufficiency on 3 to 4 unit properties like FHA. There's one thing I wanted to say, but I forget what it was. Any questions? And since we're kind of in a forum here, we can make it like a mastermind quickly. Questions about this. Any other ways that you think this might impact your borrower that anybody on this call has seen? Because I think we forget about this.
Brett, I got a question. Are you actively looking for this, or you just have this or if you stumble across it, you know you can do it type of thing?
It's like income. If I know the income is like low hundreds or, you know, under 100, it's like an automatic for me.
Got it.
Hey, Fred,
Yes, sir.
you have a slide. I don't want to take any thunder. You're doing a great job. And what I really like is that on your FHA one you did before and this one, it's geared towards the realtors. So really kudos to you for, you know, preparing the presentation as if you're going to speak at a training ceremony for them. But we're missing the biggest thing, and I don't want to take it away from you. Do you have the 100 AMI or the 120 AMI in your repertoire here?
I don't. I have the 100, which is coming up next. So
Great, because that is the real key since March 1st.
Yep. So next here, but wait, I have more, Brett. Home One Loan by Freddie Mac. All right. So this is basically the same thing as a HomePossible. pretty much it's all the same as HomePossible. Only you can go up to 100 AMI. So there's no there's no hits or penalties for being at the 80 AMI. But Brett, your point was 120, right? In some cases, it is 120.
It's 100 AMI as of March 1st.
Yep.
120 is for those of us that are lucky to have high balance counties. You can go up to 120.
Like North Jersey, Central.
But the big thing about this is that this is for Freddie or Fannie, is that in our pricer, because I think Wes or Ken asked this, if you click both affordable for HomeReady, HomePossible, and you click the first time home buyer button, when it does its search for the products, it will, based on your county you put in, which is so important, you get the right county, as Fred said earlier.
Yep.
It will look for up to 100 AMI for you, and it will remove the loan level price adjustments. And you only need one person to be a first-time home buyer. So a lot of times I hear people are like, "Oh, I'm getting killed on this product." Yeah, but you can get rid of all of the hits, and you could be offering 1% better in rate if you just looked at if they're a home buyer under the income limits. Go ahead, Fred. Back to you, buddy.
No, thanks, Brett. And I love this. Like, anybody can jump in because, you know, if I'm missing something and help people, obviously to save your ass too. So the big thing about this, the first time home buyer thing is a lot of people still don't know that you're still a first time home buyer if it's been 3 years since your last home. So, you know, make sure you push that, because we assume, but you know, once wise man told me that don't ever assume that they know everything. Pretend that they don't know anything. So make sure they know that, because you might see eyes roll like, oh my gosh, that means, you know, if I sold my house 4 years ago, I'm still a first time home buyer. Yeah. So that is, make sure you push that. All right. So this is huge. The home one up to 100, up to 120 in some cases, depending on the county. And that's it. Any kind of questions, I just leave this up to here for me. And if anybody wants to brainstorm about this or say, hey, you were wrong about this, can you update this? Please let me know. But for me, it's very important that I do this because, again, with rates right now, you can be a lifesaver and take the stress off of having to compete with other lenders if you can do this correctly and obviously have a better pricing for your borrowers. Next, though, I will unshare this, stop sharing, and I'm going to put this over to Natalia. So Natalia has something that, which I would say 95% of realtors don't even know exists anymore. It is FHA spot approval. The days of condominiums and oh, you can't offer FHA on this product because we're in a condo, we didn't renew our condo license. Those days are gone. So for those of you who don't know that, and you can share this with your realtors, here's Natalia. I hope she's here.
Good morning.
There she is.
Yeah, so if you've been in the business more than like 13 years, you probably remember spot approval that FHA discontinued back in 2010. They rolled it back out back in 2019. Let me share my screen here.
But they renamed it, right, Natalia?
Yes, so it's a single unit approval now. Can everyone see my screen? Look okay?
Yes, ma'am.
So we're going to be going over site condos and single unit approval. So for single unit approval, also known as spot approval, discontinued 2010, return in October of 2019. This program requires direct endorsement underwriters. So not all lenders actually provide this program. We do, because we do have direct endorsement underwriters. So it's for purchases and refinances. It needs to have, the condo association needs to have a minimum of 5 units, and no more than 10% of those units can have FHA financing. So I always tell my realtors, you know, to make sure if the association itself is not FHA approved, to make sure how many units are FHA financed already, and the owner occupancy. So the owner occupancy needs to be at least 50%. Over the past few years with the rates and prices being low, a lot of these condos got bought up by investors and they are now rented. So it's very important to check to make sure that at least 50% of the units are owner occupied. There's also a individual owner. So if an individual owner owns more than 10% of the units, as some investors like to buy up multiple units, the association is not going to be eligible. Same thing if there's less than 20 units, they can't own more than one. We need a questionnaire completed, similar to like a regular condo approval, and then maximum of 15% of the units can actually be in arrears, meaning like they haven't paid their HOA dues. That doesn't include late fees or administrative charges. And we have to make sure that the condo project has not experienced financial distress event in the last 3 years, meaning bankruptcy, deed in lieu of foreclosure, things like that.
What about litigation? It's the same thing, right, Natalia? So
yeah,
any condo in litigation.
Yeah, I believe that's also in the last 3 years, or currently any sort of litigation currently. So we can't have anything in the way of the approval. Does anyone have any questions on this before I go to site condos? Okay. So site condos, very similar to single unit approval, but the condos themselves kind of look like townhouses. I have one that I'm working on right now, actually. So it can look like a duplex, but it has the zoning of a condo. It's not a single family home. It's not a twin. It's a condo. So in this case, it's a single family detached dwelling with no shared spaces, or a single family detached or horizontally attached townhouse consisting of the dwelling and land encumbered by condo form of ownership. So each unit must own the interior, exterior, and land that it's situated on. It must be responsible for the entire cost of the maintenance and insurance for the interior and exterior. The homeowners and flood need to cover the whole property, not just walls in like we see on a regular condo. And the appraisal must classify the home as a condo, not a townhouse or anything like that. And we will need a condo rider for FHA approval for that property. Any questions on that? Does anyone have experience with site condos?
I actually have a question. It was on the previous one on single unit approval.
Sure.
Is that being done internally at Princeton, or does that have to go out to FHA?
So the questionnaire that's completed, it's I think the HUD 1999, it gets sent out to the association first to be completed, and then we send that to FHA for approval for a single unit. So on the questionnaire itself, sorry, go ahead.
No, you go ahead. Sorry.
I was just on this questionnaire itself, it asks about the owner occupancy rate, how many units are financed with FHA, and all those other things that we have to make sure that it checks off all the boxes in order to get the approval. And then they'll come back to us and tell us whether it's approved or not.
That's where the catch is, and you got to go to a government entity to sign off on it, and it takes time, everyone. It takes time.
They're pretty quick though, aren't they?
Yeah, it takes up to like 48 hours. It's not terrible.
Really?
And we usually do it right in the beginning of the process. As long as we know that we're doing single unit approval, we send out the condo questionnaire pretty early on, and it takes about 48 hours. But FHA does usually also require the appraisal at that time too.
So Natalia, this is awesome, by the way. I'm really impressed. Yeah. Wes, to answer your question, it's now done through FHA Connection. So once we have the condo questionnaire back, it's 48 to 72 hours to get the yes or no.
Appraisal is needed at that time too?
No. Appraisal is not needed. Erica will do your FHA Connection order of a case number, the same as any other FHA loan, except she's going to do SUA for single unit approval. And then she will send you and your processor or LOA the 5-page document that has to be filled out by the condo association. Once they fill that out, you send it back to Erica. She puts it through to HUD through the through FHA Connection, and then in 2 to 3 days you'll have your answer. We've done about 5 of them on my team, and all successful.
Yeah, Natalia's in one right now as well. I mean, it's when you explain it to realtors, and you know, you hear all the time, like, no, that this condo association is not approved. It's like, no, hold on a second. So it's a great idea, and it could get you that deal. I mean, so I love it.
I have a question regarding the site condo. Is this the same thing as a 1 to 4 unit? So the same thing, like I have these down the shore all the time. So if it's a
Yes.
1 to 4 unit, when you say no shared spaces, obviously the land area is going to be a shared space. The common ground, it says no common grounds, but
So it is 1 to 4 units. So site condos, I mean, they can be more than 4 units, but like
okay, 'cause
anything less than 5 isn't going to get a single unit approval. So a site condo, it does have to convey with the land. So like this house, for example, right, it's got the sidewalk going right up the center of the property. So it is shared space, but the land on either side is each individual owner's responsibility to maintain and the exterior of the home. And it's only connected by 1 wall. So that's what it would need to check off all these boxes for it to be considered a site condo.
okay.
So to Maureen's point, if it's an up at, like, there's some shore houses that are up and down condos.
Yep.
There's a first floor and a second floor, it's still condo. Does that disqualify them from the site condominium, or is it just a,
So you're saying there's a condo on the first floor and the second floor?
yeah,
Yeah, so each individual unit has to be just connected by 1 wall. So if it's connected on the bottom, so vertically and horizontally, it would not classify as a site condo because both those units can't have ownership of the land that it's situated on. And I think I also missed a point here that all the units in the association need to conform to the site condo guidelines. So they all have to be uniform and they all convey with the maintenance for the exterior and the land that they're situated on. So it's typically like a townhouse, just like the picture, that's connected by 1 wall, or an individual family residence that's zoned as a condo for whatever reason. But it's not like you can't have multiple units on floors. It's just horizontally attached.
Hey, Fred, back to the HomePossible / Home One. Not to be anal retentive, but is Home One under the umbrella of HomePossible,
Yes.
or do you? Okay, so if you run DU and you need that
LP.
100
LP.
I'm sorry, yeah, LP, and you need that 100 AMI, will it automatically find that under Home One, and then the pricing in Optimal Blue also will reflect that?
Yep.
Okay, thank you.
One question on that. MI, is that reduced with Home One or is it standard MI rates?
Same thing as HomePossible. So you get reduced MI. It's great.
So there's no reason to be doing HomePossible. You just do it as Home One.
Pretty much.
No
Anybody
other
else?
questions? Yeah.
Dude, you guys taught people stuff. This is so awesome. How many people learned
Yes.
some things today, man? Like everybody, right? So great.
I would just really encourage people to take this snippets of it. Like, I don't know what the hell I'm doing with this stuff. Like, I'm not a master trainer. I put it together and just give information. This is your way into a real estate office or group. That's it. Easy peasy.
Anyone else got any questions for these guys? Natalia, Fred, thank you so much. I think you guys did an awesome job. Really excited about it. We're off to a great start to the week. Let's finish it strong. Let's make those phone calls, get your collisions going, and I will see you guys bright and early on Monday morning for our kickoff meeting. Happy selling, everybody.